Alrighty then. Alrighty then. Let me turn my volume down over here. Good day, everybody. Good day. Good day. It is Thursday. I had to remember what day it was, guys. I have been off the map the last couple days because I've been getting up at, well, I should say, I started a 4-day class yesterday. It's an FX class. I got accepted into a company where they funded me a 100K account. So yesterday was actually the start of a 4-day class on some new trading strategies that I'm actually in the middle of learning. So it's not anything I don't think I want to talk about on my streams until I worked with it for about a month or so, just to get some data, some hard data on it. But perhaps I might bring that into the fold. So we'll definitely just stick with our, with our supply and demand zones, daily and 4-hour confluences, and smaller time frames if need be. But anyway, it's funny because Tuesday evening I did my shorts video, my daily shorts, and I mentioned on there jokingly at the end, pray for me that I wake up early. Well, I needed more because I did end up getting up late. I was supposed to get up at 2 o'clock, and my body just was not ready for it. I didn't get to sleep till about midnight, I think it was, and then to turn around and try to get up at 2, yeah. So I completely spaced out. Did not hear my alarm clocks. Had 2 of them set and blew right through them and woke up at 6:15. So it was bad. It's been kind of stressful lately, going through some things. So yeah, my body just needed a reset. So anyway, I joined the second half of the class. Wasn't a big deal that I missed the first half because it's more of a review anyway about stuff I already know. But today was the start of well, some newer strategies. So and even at that, I already know the strategies because I've already kind of went ahead and watched some videos on that topic a couple weeks ago when I got hooked up with them. So from their, from the dashboard that they provide us with. So anyway, I did get up on time today. I got to bed at 8 o'clock last night. It was wonderful. And then got up at 2, 8, 9, 10, 11, 12. So yeah, 6 hours of sleep. I'm good. I'm doing all right. But look at it this way. This is basically like my 5 p.m. since I've been up since 2 o'clock. So needless to say, I'm going to do the stream. And then I do have a kind of a weekly thing right after this, which starts at 12 o'clock my time. So needless to say, this will just be a 1 hour video, 1 hour stream before I hop onto that next one. But I thought it was a good chance yesterday for me to kind of take a break from everything. I didn't do a shorts video. I just needed a break. Just one of those reset days. Just reset and take a break. So that just so happened to be me yesterday. So here I am back today. Slept on it, got my lessons out of the way this morning, and I'm ready to roll. So let's have a look and see what's up today. As far as I need to get my goodies. Let me get my stream pulled up. Economic calendar, ladies and gents. Today being Thursday, we did have 2 high impact events come out. The gross domestic product for the British pound came out right on expectations. And I do believe that the previous report was revised downward, if I do remember right. Let me go double check. So I just pulled up the different period releases. Click the revision button. So revised. So the previous report on the GDP, they had come out and said it was a 0.3% increase, when in fact it was just a 0.2% increase. So that was actually a little bearish because they had to revise that. Okay. It was a bullish release when it came out because they had projected 0.1%. Okay. That gold line that you see, we're talking about this blue bar, the second one from the end, right? So the projection was for 0.1%, but when it was released, it was actually 0.3%. But upon this release today for this candle, which is today's, they mentioned a revision down from 0.3 to 0.2%. So that's less GDP growth than was expected, right? The economists do their thing. They come up with all the projections and numbers. And then after it's released, sometimes they have to go through and recalculate things for whatever reasons. I don't know the whole process behind that, but long story short, sometimes they revise whenever maybe they need they receive some additional information since they put their calculations together. But nevertheless, the result was a bearish result, partially on today, okay, because they had to revise it down. Now, today's report came out right at expectations, the 0.1%. Okay, so that's neither bullish nor bearish because it met expectations. Now, one could look at it and say, okay, but they revised the previous period down. So perhaps that might give us a little bit of bearishness on the British pound. I don't know. Let's go take a look. Okay, that was at 1 a.m. Central Standard Time. So let's just go start off with the British Pound Index, the BIXY, okay, the BXY. And let's go find, let's see here. Get off me. Okay, 1 a.m. So I'm looking for 1 a.m. So that's going to be right. What am I on? Oh, it's over here. I'm sorry. No, that's not right. Wednesday, 1 a.m. Wednesday. Well, it'd be okay, so it'd be right here, basically, guys, because obviously the index itself isn't operating when that release came out. But anyway, when the index did open up at 7 a.m. my time, okay, it got a push up, but then a retracement. So let's go look at the pound dollar. That might be a little easier to tell, see if that had any bearing on it. Pound dollar. Again, that report came out at 1 a.m., so that would have been over here. Would have been right there. So yeah, not a whole lot of volume pickup at that time. Again, it was a neutral reading. Okay. But anyway, after that, got a spike. About 30 pip spike up on pound dollar. So bullish for the pound, but then it's kind of retraced. So yeah, not really like a gigantic difference. It doesn't appear. Okay. After that report came out. Yeah, it'd be this hourly candle right here, guys. So yeah, we got a little bit of a push up and then it's just retraced it all down. So yeah, not really a too big of a deal on the British pound, on the GBP or on the GDP release. Okay. But then we also had unemployment claims come up over here for the buck at 7:30. So that was 3.5 hours ago. And we had a miss. Okay. So we ended up getting 5,000 more unemployment claims. So that's 5,000 more people in the U.S. that filed, which means bearish for the currency because that's 5,000 less people that are in the workforce. That's 5,000 less people contributing to the GDP potentially. When we don't have a job, what do? We hoard our money. Okay, we hoard it because you never know. You never know when the next paycheck's coming. So that's not a good thing for the GDP, among other things, right? So yeah, bearish for the buck. And again, that was at 7:30. I wouldn't say this is like a gigantic difference. A 5,000 miss on a instrument that's 220,000. In the grand scheme of things, it's not gigantic. It's not good, but it's not horrible. Okay, it's only 5,000. If this were 50,000 more. If this came out 270,000, then we're starting to freak out a little bit, right? But when it comes to the unemployment claims, these numbers for the dollar haven't been good at all anyway. Now we did thankfully yesterday have the really good non-farm employment change. Okay, we had 70,000 higher of a number basically. Okay, the expectation was 66,000 new jobs, excluding farming. Okay. Government, that kind of thing. But we got 130,000. So that was a very warm, very nice candle. And again, I didn't do my live yesterday, so I wasn't even able to talk about all this. But yeah, this is just me now, just kind of reflecting on it. But yeah, that's a gigantic number. So it's no surprise that dollar-based assets were very, very bullish on the buck, bullish on the dollar, right? I mean, even the pound dollar. Okay, so here you go. That candle right there was your 1 hour candle. That was the candle where the dollar's report came out good. So, of course, dollar strength, meaning pound weakness. Dollar yen. Look at dollar yen was huge. Dollar yen had just a massive move, a big range. This is a 1 hour candle right here. And actually, we don't even have to do it on a 1 hour. We go all the way down to a 1 minute. I don't know why my Zoom is going so slow. God, my computer is just going slow, and I don't know why that is. Like my Zoom is just not zooming fast. See how slow that's going? But anyway, hey, there's your 7:30 candle, 7:30 Central Standard Time, by the way, guys. Just a gigantic spike up, based a few candles, and then another big, massive drop down. Trader Nick's talking about this could potentially have been the big banks or the Bank of Japan manipulating. I kind of tend to agree. See, it's kind of easy to mask a big drop like this. In other words, dollar weakness, Japanese strength. It's kind of easy to mask this somewhat after a big spike up from the jobs release itself, the non-farm release. A big spike up, and it's normal, guys. A lot of times it's normal when you get a big giant spike up on an NFP or interest rate or really any red folder event, okay, any high impact event. It's natural to get a big spike up followed by a big down spike like this. But this was just ridiculous. Okay. Number one, the candle up for that 1 minute was 100 pips. It was 99.6 pips. So call it 100 pips. Okay. Big spike up. Okay. Big spike. But what about the spike down? The range of this candle 138, 139 pips, guys. That's massive. Don't you think it would be? Don't you think that's kind of an easy place for the banks to potentially be manipulating this thing? Okay, because remember, they don't want the Japanese yen to get too awful weak. They don't, especially when they see a candle go against them to the tune of 100 pips in 1 minute. No, that causes a little bit of freak out mode. And not only that, where did that candle move us up to? See that blue dash line right there? That's a former support resistance line. Okay, so we're talking over here. Okay. I just went back to a daily time frame so you guys can see, because obviously that 1 minute candle I just showed is in this next to last red candle down. But remember, price was down here at the bottom. So it was at the bottom of this daily candle pretty much when that report came out. But then it spiked up 90 pips or 100 pips. And then remember, it spiked down. So what did it bounce into in the grand scheme of things? This former resistance point back here. Okay. So I mean, listen, when price is down here at one point, price goes up. Forget the report. Forget the Bank of Japan for a second. Okay. So forget those entities. When price comes back up, you're going to have people remembering that. Hey, this used to be a strong resistance point because look what happened when we got up there. Just a big, strong drop. So I think that was part of it as well. The shorts piled on. Maybe some of those were institutional shorts. Whale shorts. Okay. Traders that know a thing or two about a thing or two, among the fact that it was obviously kind of a revert to the mean type of an action / potential intervention, manipulation. Okay. I can see all that stuff happening. So anyway, yeah, quite the interesting day on dollar yen specifically. Of course, on all the dollar pairs, but just dollar yen. I like to always go to the dollar yen when I'm trying to see how big or crazy a US dollar based move is because it has the highest average true range. Okay. ATR. So it's basically about 120 pips on average a day. I don't know. Let's go look at the updated number. 143. Okay. So dollar yen is up to 143 pips on average now for an average true range. See, I have it stuck in my head from back here when it was, let's see. Yeah, when it was like, 120, back in this area. But now we're up 143 of late. So, yeah, anyway, dollar yen's going crazy. It's going crazy. It's going crazy, ladies and gents. So let's go and see what's on the tap for the day. Let's go look at our top setups, guys. Okay, so anyway, just to finish off over here, though, real quick. Let's see. We got some more lip flapping sessions this evening for FOMC Logan and Miron. Remember, Miron is kind of a hot topic because he's the one that President Trump nominated. Okay, he was the one that was nominated by him for replacing, what was her name? I forgot the other lady's name that ended up, I guess, getting fired or quit or something. Lisa something, I can't remember. But he's the one that got replaced. So remember, he's a very dovish speaker. Okay, he wants to see rates drop in a whole percent. Right. So that's a story all in its own. I don't really get in the middle of all that, but yeah, it'll be interesting to see what he has to say. But as far as tomorrow goes, tomorrow's obviously Friday, guys. The Swissie's inflation gauge comes out, the CPI, the month over month number, projecting to keep the same, okay, for their inflation rate. So we'll see if we have any hot or cold readings come out of that. But then other than that, 7:30 is going to be our inflation gauge here in the States. Okay, we got the CPI for the month over month and the year over year, as well as the core month over month. So let's take a look at this. So the year over year is projected to drop. Okay, we're projected to drop 0.2%. Month over month stays the same. The core actually increases by 0.1%. So a little bit of a mixed data there. A little bit of a mixed data set in combination with the core month over month and then the regular all around year over year. Okay. So that's going to be interesting to find out. As far as inflation goes, you guys, you gotta know that's not bad. I mean, what's our goal? What's our goal? Okay, our goal is always to get down to 2%, right? Let me see here. Economic data. So I'm trying to find inflation data, CPI year over year. Woo! Okay. Target inflation rate, 2%. We've been flirting above it. Let me just scale this out a little bit. Let's go out a couple more years, get some more data on here. So remember, way back in the days of COVID, okay, the days of the COVID, remember we got up pretty high, pretty pricey at one point. I think we got up to 9%. And then within that year after, we kind of dropped all the way back to 3%. And then from here, it's just been a very steady, very painfully slow, downtrend. Now, is it really a downtrend, though, if we're only 0.3% lower than we were on August 2023? Not really. So it's just basically been sideways. But if you kind of cock your eyes sideways, you can see where we've had some lower highs, lower lows. But of late, we've actually had double top, okay, even highs at 3%. And just a little bit lower of a low back here in May of 2025. Okay. So it's just basically kind of bouncing around between 3% and like 2.4%, we'll call it 2.5. So 2.5 to 3. Okay. So again, 2.7%, which isn't too far away from the target inflation rate. So some would say that's still kind of sticky, right? Still kind of on the sticky side. But at least it's not 7 and 8% like it was way back here 4 years ago, right? 3 years ago, 4 years ago. So anyway, but projected to go down to 2.5. So that would obviously be a good thing for our pocketbooks here in the States. It'd be a good thing for stocks. It'd be a good thing for when we're trying to put gas in our car. Okay, go buy things, clothes, groceries, all that kind of stuff. Be good for that. But it'd be negative for the currency. Because remember, currencies and stock markets of the world have an inverse relationship when it comes to inflation. Okay, we don't like inflation when we go buy things, but let me rephrase that. We like it. Yeah, we like it when inflation goes down. It's easier on our pocketbooks. The currencies have the opposite effect. Okay, currencies go down when inflation goes down. Typically, there's always outliers. this and that. But currencies love inflation. Right? So anyway, that's your economic calendar. Let's go take a look at the top setups. And guys, a lot of these assets on the bullish side have been on here for a while. The only thing is they just seem like they continue to drop in price, or drop in score, I should say. Okay. Kiwi yen, Aussie yen, these things, probably half of these on this list in the blue, half of these were at double digits or higher just a couple of weeks ago. But as you can see, everything's kind of going back down. I mean, it's going more towards neutral. So in other words, it's not a bullish score getting stronger. These are bullish scores, but getting weaker. So it just makes me hesitate just a little bit on buying currency pairs like that. And really the same thing on the bearish side, except there are more items on the bearish list. So some of these -5s on here are fairly new. So I may be, personally, I may be a little more interested on the bearish side of things. And how do I know if it's something that's getting stronger or getting weaker? The Edge Finder, guys, that's how we know. Okay. If I see Euro Aussie dollar as an example is -5, I've also got a top setups history to where I can go select all these assets and see where the scores were recently. Let's go look at Euro Aussie dollar. Okay, top setups history. Okay. So here's Euro Aussie dollar, and it just shows me it shows me the scores from the previous days. So there's the 11th, there's yesterday, -5. Okay. There's the 10th. And all these are -5s because they all line up right at the start of the bearish line, which is the red. So my goal for every one of these assets that I trade is I either want to see it touching the red or touching the blue. If it's out in the middle like this, that's neutral. Okay. Or take a look at all these scores back here. Okay. They're not touching the red. There's a 0. There's a -3, -4, -4, -4. It's not a strong enough reason for me to justify pulling this chart up and smash the sell button to short sell it. Okay. Not till it gets down to the red. Okay. There's a -6. So that's a pretty good score. Then we went back to -5, -6, -6. But this is the important thing here, guys. And this is what I love so much about this specific spot in the Edge Finder is you can clearly see it's getting stronger, or it's getting weaker and weaker, right? It's no coincidence as this thing gets weaker and weaker that the price gets weaker and weaker. See how this is going down? It's kind of hard to see on this screen because I only have a month of data in there. I don't know. Let's try going back a little bit. This might be a little easier to see, but you see how you see how scores are getting weaker and weaker and weaker. And if we look straight up at the price points that coincide with it, you can see how the prices get weaker and weaker, right? Weaker and weaker. It's no coincidence it's getting weaker and weaker because the daily scores are getting weaker and weaker, right? So I love the top setups history of Edge Finder, just among many things, but this is one of the big reasons I like it right here. Okay. Just because again, you can track anything, any data point we have for anything in this world when it involves economics, buying or selling something. Okay. Or any parameter, anything, we can put a chart on anything. Okay. You can put a chart on house prices, right? You can put a chart on anything. So just seeing the different days of strength or weakness in a currency pair or whatever asset, gold, silver, Bitcoin, indices, okay, oil, all that, we can track it. So if you guys have not tried out the Edge Finder, I do know that the A1 Trading is still doing the free week. You can always go in A1 Trading. Okay. You can always go in here and click up here where it says free week. This is a1trading.com. Otherwise, you'll get a pop-up right here where you can unlock free access. And it'll basically, you'll basically go to the Telegram and, subscribe to A1 Trading there. And same thing. That's basically how you get hooked up. But all you do is just go to here, a1trading.com, click unlock free access, and then it'll send you a little thing right here. You put your name, you put whatever you trade right here. And then how do you think Edgefinder could help you best in your trading? There's no right or wrong answer to this, but obviously they're taking the time to set it up for you to try as a trial run. They just want to make sure you're actually interested in it, right? Real simple process. But then you hit that, and then they'll get you hooked up. So anyway, yeah, that's as simple as that, guys. Free access to the Edgefinder through the rest of this week. Okay. So definitely go and get you one if you haven't already. I can promise you it is the best thing I personally have ever invested in or bought in my trading history. Okay, so go check it out. It's good stuff. But yeah, just getting back to the top setups. We'll take a quick look at a few of these. I do have about half hour before I have to hop onto that other meeting I've got going on. So and yeah, if you guys if you're popping on, just let me know if you got anything you'd like me to check out. Okay, any particular assets, be happy to do so. Run it through the Edgefinder here and see what we got. Looks like this happens sometimes. I think they're doing some updates or refreshers or something, but that's okay because I've got it over here on my other screen. I'll just not hit refresh. Oh, never mind. I did the same thing. Interesting. Yeah, it must be doing some updates, guys. So give me 1 second. Refresh it again. Well, shoot. That's not going to do me any good, but that's fine. I've pretty much got them memorized as far as the assets that are showing bullish and bearish. Gosh, I can't talk today. Bearish. Okay, so Aussie yen, Aussie Swiss, we can clearly see those. I just put them in alphabetical order. What in the world is going on? Neutral. Okay. Good Lord. My scroll feature is just going like unbelievably slow today. Not just for this, but for everything I try to scroll down. So not sure why it's doing that. But anyway, let's go take a look. So we got Aussie Swiss, Aussie yen. Let's just take a look at a couple of these. Aussie Swiss right here. Now I drew up a 4-hour demand up here, guys. I feel like it's probably a little on the pricey side though. So I do it. I got quite a few demand zones drawn up here. This might be a little too pricey for my taste. I'm not really the biggest fan out of this one. But if we go down a little cheaper, okay, I've got this 4-hour demand down here. So this is the one I'm kind of watching the most right now. I'm just thinking, guys. Yeah, I've barely even looked at the charts the last 24 hours. Yeah, see this. So yeah, I mean, this is one I just drew up like an hour ago, but we have dropped into this 4-hour demand zone. But let me think about this for a second. Okay, 1 hour, 15-minute. Decent spot to possibly buy. Because I'm just looking at this. Okay, so I'm looking at the 4-hour zone itself. Now I've dropped to a 1 hour, and I still don't know what is up with my computer, guys. Sorry, give me a second. What in the hell is going on with my stuff? Okay, we're back up. Yeah, so anyway, just going back, guys. So when it comes to the confluence as you guys know, I do like daily 4-hour. Well, I'm not really getting it daily up here. And that's part of the reason I really didn't care for it this much. If I draw up my daily demand, it's going to be this indecision candle here. But we didn't have a ton of volume, and that's where it's throwing me off. I mean, yeah, if I draw this up, this obviously meets the definition of a daily demand. However, the current daily candle is the candle I need to close to give me a gap, right? So it's premature for me to draw this up as a fair value gap when the candle itself hasn't even closed. So that's why I haven't been too excited about using this as a daily demand zone. And if I'm not excited about using this as a daily demand zone, then I may not be interested in anything that's higher up than that even, right? So it's not even really fair for me to draw this in as a daily demand when this candle is still not closed. So I know that probably doesn't make a whole lot of sense, but I basically need today's candle to close first before I can confidently say that's a daily demand zone, because it has to leave me a gap. Well, if it's, as long as price stays up here or higher, it's fine. But we still have 1, 2, 3, 4, 4.5 hours of, trading of the trading day left. Guys, I really want to buy this. See, we got a 4-hour demand right here because now we're just stepped everything down to a smaller time frame. But what's throwing me off is the fact that, if I look at this as a 4-hour or even a 1-hour, then I would basically have to look at my swing low as down here, swing high up here. And that would be my curve analysis. The problem is, where are we at? Where's this demand zone at? Is it in the top third? Is it in the bottom third, or is it in the middle third? Well, it's in the middle third, right? What do I not like to do? Diddle in the middle. Okay. This is typically where retail traders get chopped to pieces. As always, the whole point in trading is to buy low, sell high. So I don't want to be buying up here at the top, number one, because it'd be buying expensive, be buying a premium. I don't want to play around here in the middle because I'll get chopped to pieces with the rest of the retail traders. So I prefer discounts, meaning I need price to pull back down here. But I'm not really getting a good look at 4-hour zones. So, okay, let's go see what's on some smaller time frames. 2-hour, not getting anything. 1 hour. Now, 1 hour is a possibility because that's going to be my 1-hour demand, which is also at the origin of this overall strong move up. Okay. So let's just draw that in. There's our 1-hour demand. Now, I did not get a 4-hour confluence though, because these candles are all touching wicks and bodies. So there's no fair value gap. Okay. That doesn't count as a fair value gap because look at this wick over here to right here. It goes all the way and touches that. So that's an efficient price structure. So I can't use anything here as a 4-hour down here. Okay. But up here, if I want to get aggressive, I could use this. If I want to get stupid aggressive, I could buy here, but I don't want to because it's in the middle. Okay, down here is less aggressive, but at least it's at the origin of an overall strong move up on a 4-hour time frame. But I like, and the thing I like about this on the 1 hour is the fact that now this is a 4-hour, but if I go to a 1 hour, we've broken all these structures on the way up. So that's a good look for this area here, but it has to be 1 hour candle. So remember, the lower the time frame you go, the more noise you start running into. That's why I like daily 4-hour confluences so much noise. Lost you for a second. Stupid ass thing. All right, let's try this again. I've only got a little less than 20 minutes or about 20 minutes left. But yeah, anyway, I don't really have any of my alerts, guys. Keep in mind, I took off yesterday, the bulk of the day. I had to get out and go get my new license plate, go get some groceries, basic stuff like that. And when I got back, I just took a break. Okay, I have a tendency of staying on my chart from sun up to sundown and beyond, and even earlier than the sun. So anyway, like I said, I had a lot going on, so I just I decided, and honestly, I haven't had the greatest trades lately, and part of it's just been anxiety over certain things. Okay, but that's up to me to call that out to myself and just take a break, just step away from the charts. And it was a wonderful thing because coming in today, I feel a lot fresher. But yeah, I say that to say this, that I haven't really dug too deep in a lot of these assets yet. I've been playing around with the class I took and this other trading strategy. So I don't really have a whole lot of anything on the daily 4-hour right now. Okay. Obviously, I have alerts set, but it's just too far away. Okay. Long story short, for the Aussie Swiss, did they get this refreshed? Let me go look. Just go over here and refresh my edge finder. Yeah, sorry guys. Sometimes they, again, I think this is the first time it's happened while I was on stream, but okay, there, we got it back. So let me go ahead and get rid of the neutrals and go back to, no, it's still not right. Oh my gosh. Guys, I don't know why this ain't working for me. I'm just going to ignore it. Forget the edge finder for now. Okay. They probably have so many people getting it, getting set up for that they're updating it or something. I don't know. But anyway, I can promise you, it works great. Once in a while, when you go to refresh it, it just won't refresh because they have to do their updates. So that's really the status. Go take a look at my alerts, guys. Man, clear my throat a little bit. Yeah, and I got to go through here. Yeah, see, I got to go in here and clean up a bunch of stuff. So I'm just going to do this. We'll just finish the day out looking over here because I know Aussie Yen and Aussie Swiss are on the list. Nice uptrend. Now, the cool thing about Aussie Yen is the fact that we blew through this higher time frame supply zone, this yellow line, this yellow rectangle from back here. Okay. So that's showing strength somewhere. Why is my stuff going so slow? Somewhere in this, I swear, guys, I can't talk today. What a mess. There's some strength somewhere in that up move. Now, we had a daily demand down here that was created as price went into this overhead supply. And price did end up coming down, but it hit the daily demand. So what happened? The daily demand actually bounced it back upwards. So if I go back to the daily, okay, we're talking about right here. Now, you see I've got a green line in there. Well, that's a 4-hour demand. That's my confluence, okay? Excuse me. And it did not get touched. Price just came to the top of the daily before catching a bid and flying back up. So I really can just kind of get this out of my way now and know that this daily caught a bid. So we've got higher highs and higher lows. So I just need to look for a retracement. Okay. This was a 4-hour demand at one time. It caught a bid right at it and wicked up. So that's old news. So, perhaps where we're at now is where we could look at the 4-hour. Now, the reason I haven't personally been too interested in jumping into this thing is because this demand was formed from bouncing off of another demand. In other words, it did not create itself necessarily. Okay. Remember, when I look for supply and demand zones, I want to see that they created themselves, not as the result of bouncing off of an older supply or demand zone. I swear I cannot get my throat clear, guys. Okay, so it did not create itself. It was created as a result of bouncing off of another zone. So that's why I had no interest in buying here. It's just not as strong. Okay. Yeah, it broke a structure, but it did not create itself out in BFE, as we say back home in Tennessee where I grew up. Okay, BFE. Okay. So that's why I haven't been interested in buying the bounce of this 1 hour demand. At least not yet. I mean, it's not over yet. Look, if we get some type of a bullish engulfing candle, perhaps. Oh my God, guys. Okay, there's a 15-minute chart. 5 is just too little. I mean, you could say this was an engulfing candle, but thing is, the bottom of it did not go lower than the previous candle. So I like engulfing candles when they go higher than the previous candle and lower lower than the previous candle at the same time. This time it didn't. So it's just a little bit less bullish strength showing itself, right? And as you can see, what's it doing? Well, it's kind of retracing. Now, it very well could roll around and go back up, and then that would mean this 1 hour zone, would work out after all. Talking about this one over here. But it's just not my cup of tea. It looks sexy, I gotta say. It looks sexy, but I get hung up on the fact, if I turn my drawings back on, I get hung up on the fact that it created as a result of another zone bounce. Okay. It's got to create itself. It's got to create itself. Now, this one right here is a good example. Well, maybe, and that's obviously that one down there is on a smaller time frame. I think that's a 15-minute, if I remember right. Let's go look at that one. It's a little lower. Did that create itself, or did it create as of a result of bouncing off of another zone? I think that one is a logical zone to take, because if I look back here, yeah, it bounced into these candles, but where's my basing? Where's my consolidation? Okay, if I go to the top of that wick to the bottom, obviously, pull it forward. Ooh, that's close. That's close. It's close. But did it touch it? Let's zoom in. Oh no, that's going to be awful close. Got to zoom in a lot. No, it didn't. Okay, so it did not touch. This price action did not touch this zone down here. So it basically created itself, right? This was a red line saying enough is enough. Okay, we're going to base for a couple candles. We're looking obviously on a 15-minute chart, so roughly a half an hour. We're going to base right here. Okay, half an hour. It's a 30-minute candle. We're going to base and then push price up. Excuse me. So we're talking about this candle here. So that candle looks pretty good. Okay, it came close, but it did not touch the demand zone below it. Right. So yeah, I mean, it's for being that it's retracing from so far away, I would say that's a little on the narrow side. But if I get a strong pin bar candle inside of it, or a bullish engulfing candle with some expanded range volume candles, in other words, volume spread analysis, then yeah, I'd probably be interested in maybe taking a look at that. Now, because the range is kind of narrow, I'd probably put my stop loss a little deeper, right? But that might be a spot. But yeah, I'm just not interested in it right here. And again, it very easily could bounce where it's at and go up. But I'm not going to be the one to put my hard-earned money on it. And as you see, it's already wicked through the bottom. Okay, so zero interest now. So that's Aussie yen. What else? What else we got over here? Guys, U.S. oil actually jumped on the list. Now, I don't really trade oil, but we can chart anything, right? Let's just take a look at oil. I haven't looked at oil in a while. Turn all my moving averages off. Let's go to the start. Monthly time frame, guys. Very slow grind down over the monthly chart. Let's go to a weekly. Okay. Same thing with the weekly, pretty much. I mean, lower low, or I should say lower highs, lower lows. Now, did this low here go lower than these lows over here? It doesn't look like it. Oh, yeah, I guess you could squint your eyes and say, I guess it did. So that's close enough. Or it could just be a double bottom. But the point is, we still have lower highs. So as far as I'm concerned, downtrend is still intact when it comes to the weekly time frame. So let's go look at a daily. Okay. Obviously, daily is the most, one of the most popular time frames for the longer term traders, the long term swings, the position, shorter term position traders. Okay. The banks on Wall Street and all the hedge funds as well. So if you're looking at this on a daily chart and focusing from here down, then you've obviously got higher lows, right? Low here, higher low here, okay? High, higher high, higher high, okay? And all these lows are going up. So again, we're getting a bullish signal at the moment. But we're at kind of a cluster, you know what, right now. The last demand zone we had on a daily was right here. This was a daily demand, and what happened? Price bounced in already. Okay, price bounced in, caught the bid, and went up. Now, it caught the bid, but it missed the 4-hour demand that I had drawn up. So it caught the bid from the daily by itself. It failed to, that wasn't even a 4-hour. It was actually a smaller time frame, but nevertheless, the daily was strong enough to catch a bid and push it up. Now, I'm not worried about this, supply zone up here because, as you see, these candles already chewed through it. So as far as I'm concerned, that's old news. And we're just getting, from this point here, higher highs and higher lows. So low, high, higher low, higher high. And now we're kind of back down here to this where all these wicks are. So if I wanted a really good discount, I'd probably wait till this zone down here. I don't know, what time frame did I put that on? That's 2 hour. Okay, so here's a 2-hour zone. It's this red candle. And then you had the leg out candle, which had a really nice spike in volume. Okay. Very nice spike in volume. That candle, that volume spread analysis candle, was more than twice the size of the basing candle. Okay. So when price left, it left in a hurry, but it also left with a lot of volume. Now, I did retrace half of it, but then the candle right after had another big volume candle and it kept going. So I'm interested in that 2-hour demand zone right there. And because I have a daily demand zone around it, if I were a buyer of oil, rather than putting my stop loss just below the 2-hour zone like that, I would be a little more cautious and just put it under the daily. Okay. Put it under here. Just give yourself a little more wiggle room. Guys, trading oil is tough. It's a lot like gold and silver because it doesn't really, it has a mind of its own. Let's just put it that way. The number one asset that people win money from is gold. But the number one asset that people lose money with is also gold. So it's kind of the same way with silver and oil and even Bitcoin, guys. They sound sexy to trade, but a lot of these assets, they kind of have a mind of their own. A lot of them don't follow a lot of really good technical analysis strategies out there. They come and they go as they please. They're a lot more fundamentally driven. Okay. So if you're just a technical only trader, I highly advise against trading gold, silver, Bitcoin, and oil. Okay. They go a lot like oil, crude inventories. Perfect example. Okay. That's one of the big ones that oil follows. I think we just had that on Wednesday. Let's go look. I think it was a bearish number too. Yeah, right here, guys. So think about this. Oil, as far as the inventories, okay, the previous number was negative 3.5 million barrels. They projected to go up to negative 0.2 million. So that's 200,000 barrels below or low. But instead, we had an outrageous number of 8.5 million inventories in the stock. Well, what happens when we have high numbers of items? And it doesn't matter what the item is. If we have a humongous stock of anything, maybe it's a t-shirt, maybe it's a jacket in the mall or a purse that you like, ladies, or anything, cars. What do we have? What do we have every year after new cars are released? What happens? What happens to everything in stock? Goes on sale, does it not? Right? That brand new 2026 Kia K5 I've got in my yard, in my driveway. Kia K5, I'm sorry. Okay. Here in a few months, I'll go get my oil changed, and I'm going to see the price on that very same car I got. It's probably going to be a heck of a lot less. Why? Because they're trying to get rid of inventory. So oil showing that it had 8.5 million barrels, that's a big change. Okay? So if you have more of something, then the price goes down. So if I've got I don't want to say oversupply, but if I have way higher of a supply of oil, yet the fundamentals are saying it's giving me a bullish score, do I really want to go buy it? Probably not. Okay, because that would make prices cheaper. When you get more of anything in the markets, it makes things cheap. When you have scarcity, that's when prices go up. And that was released on Monday. I mean on Wednesday, right? Or what day was that? Wednesday. Yeah, yesterday. Yesterday at 9:30. Yesterday at 9:30 a.m. So right here. Right there. See that candle? That's the 9 o'clock. No, that's not it. 9 o'clock. This red candle right here. Okay. That is when oil inventories came out and said, hey, we got a shitload of oil hanging out in our shelves. And when the market sees that, what happens? They sell. Prices go down. Right? There's no scarcity. It's not showing scarcity in the oil market. So price goes down. People sell or take profits, open up new short positions, things of that nature. So even though EdgeFinder is giving me a bullish signal and everything else, I don't know that I want to be selling it, or I don't know that I want to be buying it right now. Okay? Until I drop into a nice demand zone. And in the case of oil, there is a demand zone. It's just a little bit lower. So I like this. I like what's happening, because as long as the oversupply continues to make people sell, and guess what? If we still have a bullish score on oil by the time we get down to this demand zone confluence, I'm gonna think about buying this shit. Okay, we buy it, we take it to the top, just like that. A little bit of a swing high here. Okay, a little bit of resistance up here. Cheap oil. I want to buy at a cheap price. I want to buy at a discount. I can't utilize the daily demand because it's already been touched. So now I just have to rely on this 2-hour and see if that's going to be enough to give us a bid. But hey, what can we do? We can look at a confirmation entry if price does get down there. Right? Confirmation entry. And I'm just going to come down and break this structure like that, retrace to a newly formed demand, and we buy just like that. Right? That's a structure point right there where I got my mouse. When we break that to the upside, like we do here, then that tells me the buyers are trying to step in and change this trend around. But I don't want to buy just a breakout. I want to wait for this retracement. I want a little bit more of a discount. Oftentimes this discount we get puts us right back at the top of the zone to begin with, the demand zone, okay? Or supply zone if we flip everything around. And then that point right here is where I buy. Okay? I show this example every day. I show it every day for a reason. You want a little bit safer of a way to get into a trade that's not really, it's not making it any pricier. Okay. I mean, you could do a limit order right at the demand, or, right at the demand zone. But the amount of times it just chews right through, okay, happens a lot more than you think. Now you don't want to do it, you don't want to give away too much, but as long as you get something that looks about like this, then yeah, by the time you do get into the trade, yeah, sometimes maybe you're going to be buying up here. You might be buying a few pips higher. Okay. But it's proving itself. That's the important thing. It's proven itself. So anyway, guys, I would love to stick around longer, but I do have another review class here in 2 minutes. So I got to hop onto another stream. Thanks a lot for joining me, guys. I'll be back. I'll try to be back same time tomorrow, 11 o'clock, because remember, my class is also tomorrow. Okay? It's tomorrow and Saturday. So it's going to be kind of a weird, couple of days for me. I'll try to get back for the same time tomorrow. Hopefully if you guys will just stop in, say hello. But with that, I'll get off of here and I'll talk to you guys tomorrow. Have a good day.